we're going to go ahead and get this started. Sorry, Joe, I just hit start broadcast here. I hope everybody is having a great Monday morning. I have Joe Mulligan on the phone or on the line here with us today. We're going to go over some great options using whole life. More importantly, Joe has some really great sales ideas that he shared with me over the last couple of weeks that I think just about anybody could utilize or implement into their business, which is exciting to hear about. So I will go through a short commercial with IAMS. I know I have people on the line here that have never had any kind of experience with IAMS and some that do. So we'll do that really quickly. Again, I'm Beth Ricklefs. I'm a life insurance sales director here with IAMS. I am a CLU CHFC. I've been in the business for the last 20 years. So starting with IAMS here, whenever we have a brand new producer, we want to give you some incentives to start writing business with us. And so we have a few different levels of production that earn you prizes or money, however you want to look at that. For all these levels here that are presented are in terms of annuities. So if we get to the 100,000 level mark in the first 6 months of you being contracted as an IAMS agent, that could earn you, for example, an iPad or $750 of cash. That 100,000 annuity level equals to 10,000 of target premium with life insurance. And then as you can see, as the levels go up, the incentives become bigger and bigger, and you can cash out at any time during your 6 months once you've hit to any of the levels here listed. We also want to continue to support you writing business with us. Our business is not much different than yours, I would suspect, in that referrals are the best pieces of business that we can get. Somebody that you know that's in the business that is seeking out support, and you recommend that they come to work with us at IAMS. When you refer an agent over to us, we give a one-time $50 bonus for referring that agent. And then on any of the business that they write going forward, we give you an extra commission based on whatever type of business that they're writing. That isn't a haircut off of the commissions that they would make from, or a haircut from your commissions. That is completely out of IAMS pocket. So I have quite a few agents that utilize this extra money that they get, and that's kind of what they budget for their marketing dollars for the year, are the referred agents that they get and this commission that they are making off of their business. We also want to encourage you to reinvest in your business with marketing reimbursement. And so for every 100,000 of indexed annuity premium, we do put into your account $100 of marketing reimbursement. For single premium life, that's $200, and for every 10,000 of target life insurance, that is $200 too. Now, those can be used for our creative marketing services that we have in-house. But they could be used for maybe some marketing services that you might already be utilizing. We would be able to reimburse that way as well. We have a tremendous amount of back office support on all lines, whether it is talking to me as a sales director for your case design, searching out product or pre-screens, anything like that, pre-sell. We have a fantastic website that has a tremendous amount of information on it, whether it's getting forms, underwriting information, product information, sales resource library, which is a huge help. We've got our term quote engine, our our guaranteed universal life quote engine. We've got a final expense quote engine out there. So we have a tremendous amount of back office support. You know, we want to help you pre-sale, get the business in, get it all the way through underwriting and paid. And then in addition to back office, there's always the after the business is placed that we need help with, whether it's changing beneficiaries or death claims and those things. We have you covered with all of that. I mentioned just a minute ago our IAMS website. We have a great website. As far as life insurance goes, like I mentioned, you can get pretty much every single underwriting guideline that you can think of. You can get all the forms online, although I would recommend that if you are looking for forms, unless it's outside business time, that you would utilize talking to me, just because I have a trained staff to make sure that we're getting exactly the right forms out to you. There's product information out there. As I mentioned, there's a term quote engine as well as a guaranteed universal life engine. We just added a final expense quoting engine. So if you haven't been registered for that, or if that comes up for you, please reach out to one of the sales directors, either myself, Trina Murray, or Tony, and we can show you where on the website that you would access that information on our website. And one thing I really love about our website, and I don't get to spend as much time on it as I'd like to, but under the support tab, there's a sales resource library, and it has so much incredible information on there, from sample cases, PowerPoint presentations, fact finders, sample documents, specimen documents. You know, maybe you're setting up a buy-sell agreement or a key man insurance and you want to see sample documents in there. We have that all under our sales resource library. The world has turned, I think, a lot of it sparked by COVID, in that electronic applications have become very important in the way of doing business. With IAMS, we have a couple of platforms, Firelight being one of them. The other one is going to be IGO eApp Solutions, and then American National has their own electronic application platform. They are all found on IAMSinc.com. You can find all of them there. Firelight kind of generally would be more annuity products that fall under the Firelight system. There are a couple life carriers such as Allianz and National Western that I can think of off the top of my head that are going to be on Firelight. But they're also going to be on IGO eApp Solutions. So most of the life insurance we'll find will be off of eApp or IGO eApp Solutions. Again, you can find them, all three of them, on our website. If you have any questions, reach out to any of the sales directors, Trina Murray, Beth Ricklefs, or Tony Butler. And here kind of is a list that, like you can see, most of them are annuity carriers that are on Firelight. I don't have a list on IGO eApp, but almost everybody else is on there. And like I said, we've got a handful of life insurance that is on Firelight, Allianz, F&G, and I believe Ohio National we can also find on IGO eApp Solutions, so you can do it either way. We have a full team of creative marketing, our full creative marketing team, our creative marketing solutions, and they do everything, anything from a logo design, or email signature blocks, if we're talking about websites, landing pages, all of those things. And the one great thing about our creative marketing solutions is we hear a lot of agents that will go out to another marketing firm that want to help market their particular business, but they are not specialized in the insurance or the financial services field. So when they go out there, they're paying for all these extra hours of getting that marketing organization up to speed on the life insurance industry. That is not the case when you deal with our creative marketing solutions team. Is we have that all all in-house, and we are very familiar with the industry, so we're not reinventing the wheel for everything that we do. One great thing that we do as directors, whether it's life insurance directors or annuity directors, if you have not ever done a marketing analysis with your director, either life or annuity, I would strongly encourage you to do that. It's just a short form of questions about what you're currently doing for marketing and where you want to see your business go. And then the director works with the creative marketing solutions team, and we come up with a plan of what things do we need to implement into your business, whether it is revamping your website, creating a website at all, social media presence, logo design, any of those things, and we come up with a plan of the things that need to be implemented to get you from where you are right now and where you want to be. It's very awesome because it's not a cookie cutter approach. Everybody is very different and what works in their areas, and our creative marketing solutions team is trained to help you do that. And then, of course, if you're wanting to go full circle, here at IAMS, we can handle anything from life, long-term care, disability, annuities. We have a senior market area as well, and then we have wealth management. So IAMS Wealth Management can take care of anything from the very beginning stages of somebody that's wanting to get into manage money and needs the help to pass their 65 and get into the business that way, all the way up to experience level to take on that. But we want to, be able to be full service in all areas of your financial services, and so we do have IAMS Wealth Management as well. This year and in the last 2 years, it was obviously in the last 2 or 3 years a challenge to get face-to-face with producers because of COVID. And now that we are able to do that, we will have throughout the course of the year life and annuity academies. The first one coming up is already closing out. That's going to be coming up, I believe, next week, that we will have our first life and annuity academy. We will have one in July. I believe there's one coming up in September. But this is a great time for you to get in touch with or be together with other producers like yourself that are producing, share ideas, but then more importantly, get new sales ideas, new training, new industry perspective that is going on there. Most of them that we're having this year are going to be life and annuities, but we do have a couple spotted in there that will be life only as well. So if you have any interest in that, then you're going to want to reach out to one of your marketing directors, whether it's myself, Trina, Tony, any of the annuity directors could help you as well. We are doing our incentive trip, which is the Seaside Sanctuary. One thing that we do differently than other trips, I mean, everybody has a trip, right? One thing that we do differently is that we have an 18-month qualification period. So ours started back in July of 2022. It's going to run through the end of this year, so there's still plenty of time to qualify for that. As always, you can always get information from us on Facebook and LinkedIn. I would strongly encourage you to take a look at our YouTube channel. The easiest way to do that is to go to training on our website to webinars so that you can get to our YouTube channel. But we do a lot of webinars, and whether it's life insurance, annuities, sales concept, marketing driven, we have so much information, and we will be, of course, recording this one as well so that you can review it at a different time. But if you're wanting to catch up on different marketing strategies, you look at Facebook, look at LinkedIn, and also take a look at our YouTube channel. And with that, I will go ahead and switch this over to Joe. There we go. Joe, is that working for you?
I think so. Can you hear me?
Yep.
Perfect. Perfect. Let me just blow this up a little bit here. Okay. So first of all, Beth and all the folks at IAMS, I just want to thank you for giving MassMutual the opportunity to spotlight some of our products and services here. We've been working with IAMS for I'm going to say about 15 years now, and MassMutual is kind of a niche company, meaning not everybody's out there looking for all of our products. And my role as a brokerage director is to work with folks like Beth and Tony and the team to kind of highlight what we're good at MassMutual. And the first thing I will say is what I have up on the screen here is in the blue, that's our life insurance portfolio. And MassMutual is a whole life carrier by nature, as well as a term. We have great term products, ART all the way up through 30-year term. But our whole life portfolio really shines because of the dividend that MassMutual pays into the whole life policies. We do not pay dividends into the term policies. So I just want to step back for a moment, give you a little introduction with me. I've been with MassMutual for 17 years in the independent brokerage world. I am not on the career agency side of the business. I am here to support IMOs and individual brokers like yourselves that are watching this today to help you write MassMutual brokerage, through the independent channel. To layer on top of what Beth mentioned, unfortunately, we're not there yet in IGO. MassMutual's submission process for life insurance and disability, individual disability as well, is done through our proprietary portal. So when you get contracted with us, you will be submitting your business through that portal. We do on every once in a while, we'll take a paper app, submit it to IAMS and process that for you. But our software is IGO. It is the just like Firelight. It's the same chassis, but it's just under MassMutual's umbrella, and it is coming out. It'll be out hopefully this year. They're telling us so. I just mentioned dividends a minute ago. Let me show you a dividend page because everything we talk about on our products are going to be based on dividends. Dividends are of course not guaranteed. But MassMutual has never not paid a dividend since they've been paying dividends. Let me just adjust my screen here for a second. Beth, you can still hear me, correct?
Yes, I can.
Okay, so here's what I just want to very quickly point out, folks, to you that MassMutual's whole life portfolio, we earn a dividend because we're a mutual company, and our dividend rate this year is 6%. And on this page, you could see it's been 6% for the last 3 years. And I'm going to show you a page that goes before 1996 all the way into the 70s. And I just want your attention to be drawn to, do you see any dividend interest rates in the last 42 years here, right here, going back to 1978? Do you see any dividend rates that are under 6%? And the answer is no. So what I want to just highlight there is, whenever we look at a MassMutual illustration, if we're illustrating the current dividend rate, we cannot illustrate higher. In my opinion, I'm in the business 36 years, a few more than Beth. I think we're looking at a long range forecast that is conservative as opposed to aggressive. And I'm going to say one last thing about whole life here in regards to the dividend. There are only two moving parts, folks, to MassMutual's whole life portfolio. There's only two moving parts. One of those is the dividend interest rate that we pay into the contract. And the other, if we're using the contract to accumulate wealth, to pull money out on a tax-free basis, whichever loan rate you choose, that's the other moving part. So in whole life insurance, your client gets guaranteed cash value. They get guaranteed premiums. On top of the guarantee, they get a dividend. And if they decide to pull money out in the form of a loan, they're either going to choose a fixed loan rate, which is a 6% loan rate guaranteed for the life of the contract, or they're going to choose an adjustable loan rate. That's currently, we're charging our clients 5.02%. I believe it's indexed to the Moody's corporate bond. So that's really what I want to kind of just high level talk about what whole life. A lot of folks, they hear different things about it, but is it flexible? Yes. Is it as flexible as UL or variable UL from a premium standpoint? I'm going to say not as flexible, but you can put money in, you could take money out, you could reduce premiums, you could reduce face amounts. Yeah, there's a little, we have to, get to tweak the product and able to do that. But what we're built on guarantees. So before I show the next screen to you, I want to accomplish three things today. And I want to accomplish, number one, I want to talk about a sales idea where we're pulling money out of a whole life policy. Number two, I want to talk about a hybrid, a life insurance and long-term care coverage through our single premium product. And that's also available in a 10-pay. What's distinctive about that product is it's a whole life, single premium whole life that earns dividend. And you'll see that in a few minutes. And then the third thing I want to talk about is what we call the playbook. What we have available for everybody on the call today and through IAMS is a playbook that MassMutual Brokerage just put together this year, first time in 17 years that I'm here. We have everything MassMutual in a box. There's a playbook here, and I'll just scroll through it here. I'll open that up right now just to show you what it looks like. So as Beth mentioned a few minutes ago about their team and presenting ideas and strategies and case design for you, things like that, this playbook for MassMutual, this has all of MassMutual's ideas in it. I'm going to try and scroll slowly through it. That wasn't slow at all. Here we go. So, and these are all links, folks, that if I click these, it's going to be a link to whatever product, whatever thing we're looking at. And there's videos in here. So I'm just going to go through a few pages. Gift of a lifetime. Actually, I'm going to open this video up right now for you. And so the three things I wanted to accomplish is looking at whole life as a retirement supplement vehicle. I want to show you this playbook right here, which has great ideas on everything we do. And then I want to talk about that hybrid program. At the end, I want to close out. Beth asked me to show some of the things that I'm personally doing in the marketing. My own personal branding and marketing on LinkedIn and through email. I think you have to distinguish yourself today amongst what everybody's doing, and that's why you go to IAMS. IAMS has great platforms of creating a marketing plan for you, and they reward you for your successes there. Well, hopefully, I'm going to give you two freebie generic ideas that are not necessarily branded for any one particular product, but I think you're going to love it. So here's what I want to say. I think one way of reaching out to a prospect and a client today is in the form of a video. If you open the door to a conversation with a video, which is only 1 or 2 minutes, you send an email link to the client with the video in it and say, hey, take a look at this. And after you've taken a look at it, let's talk. And I'm going to roll one of the videos right now. This is an idea of buying juvenile whole life insurance on your kids or your grandkids. So we get a lot of policies in our door based on grandparents gifting money and that money paying premiums and parents wanting to insure their kids. So here we go. I'm going to roll this video. Beth, can you see that?
When you think about gifts for children,
I can hear it.
Bear with me 1 second. There we go. Can you see it?
No, I can see it now.
Whole life insurance from MassMutual can give your children or grandchildren a financial head start by providing a guaranteed amount of life insurance to help them protect their future. In addition, it builds cash value over time. Moreover, your children could use the cash value in their policies to help fund important milestones such as college, a wedding, their first home, or preparing for a baby. However, it's important to understand that any distributions will reduce the policy's cash value and death benefits, so your children should be selective about how and when they use their policies. Purchasing life insurance on a child may make good sense. Premiums are lower for children because they are young and healthy. As your children grow older, they may not be able to afford or even qualify for life insurance. Purchasing whole life insurance for a child now will help ensure that he or she has guaranteed protection for life. There is also an option that allows them to purchase more coverage at certain life events, like a marriage, the birth of a child, or at regular intervals as needed, regardless of their future health. This option is available for an additional cost, and certain conditions will apply. With permanent protection, cash value, and options to increase coverage, whole life insurance from MassMutual can truly be a gift of a lifetime. There are specific underwriting and ownership guidelines for insuring minors, which vary by state. Ask a financial professional for more information.
Hey, Joe, I think a couple people were having a hard time hearing that, but just so everyone knows, you'll be getting a copy of all these videos by email afterwards.
Yeah, you know what, Beth, because I have one more to show. Normally, when I work in Zoom, there's an option to share the sound, and I didn't see that here. I can actually turn the sound up in my office here, but are you familiar with that at all?
No, I'm not.
Okay, all right. Let's try one more. Now, so in this playbook that I'm showing you and I'm talking about, here's these ideas, here's these videos, and then there are there's links to. Let me pull that up again. There are links to brochures right here. Okay, that whether they're client brochures or whether they're financial professional brochures. There's all kind of material in here: executive bonus, retirement planning, group term. This is a great one. Actually, talks about the difference between term insurance and permanent or whole life insurance. Care Choice product is what we're going to talk about in a minute. That's the hybrid product. Disability here. Beth, do you know, in your opinion, with your producers at IAMS, are they coming to you for individual disability, not group disability, but are they coming to you for disability quotes?
We're definitely getting quotes for disability. I think that I feel like there's a lot more potential with disability, but we are getting individual disability interest.
Yep. So here's what I can tell you about disability insurance in the producer world is that you can make a lot of money in disability sales, almost as much, if not more, than life insurance, because the commissions are basically they kind of mirror the life insurance. But here's the key: there's not a lot of producers out there selling individual disability. I just quickly want to say MassMutual is not a blue-collar disability company. So IAMS has other channels for that. But MassMutual's disability world is, we are white-collar professional people, and insurance producers are white-collar. We're just not good on a premium basis with blue-collar pricing. So that's not where we want to play. We don't want to play in that market. But here, I'm going to show you now, I'm going to share my commercial idea with you, Beth, and everybody. This idea was given to me a while ago, and I kind of stole it. But imagine if you have not yet had a conversation about disability with your prospect. And what is disability? Disability is the ability for them to pay their bills when they have a sickness or an injury. And I think personally that one of the reasons a lot of people, consumers, I don't want to say don't. They don't ask for it, and when they do ask for it, you got to be careful, because when anybody asks for disability, there's a reason, and they're probably not going to be covered for that reason. But I think because it has no cash value to it, no permanent, cash value, no dividend. Well, we do pay dividends, but it has no buildup of dividends in it. So it's purely an income protection play. But for those of you that are on the call that are in your 20s, 30s, and 40s, your natural market needs disability typically more than they need life insurance. So here comes the idea. Imagine you taking what Beth will email you is a YouTube commercial from MassMutual, 30-second commercial, and I'm going to play it in a minute here, and saying to your prospect that you're going to email this to, hey, take a look at this funny commercial. This is something that you and I have never spoken about, but I'd love to talk to you after you've had a chance to take a look at the commercial. Now, here comes the commercial. This opens the door to what I call to the conversation.
In 5 seconds, I'm going to bring up a very uncomfortable subject.
Oh, we can skip it.
What happens if you ever need to miss work for a long period of time?
Why would I miss work?
I don't know. You sprain your ankle, or out your back,
Get hit by a school bus.
or a regular bus,
Get hit by a horse. Fall off a ladder.
bathtub mishap,
Polio.
floating accident,
Like by a horse.
rabies.
Well, scurvy. Talk to us about disability income insurance today.
Okay, so the idea there is when every client and prospect always asks us, well, send me some, let me take a look at it. You know, they want to see illustration, they want to see something. How about sending them the opening door to the conversation? Send them this commercial, say, hey, take a look at this funny commercial. Let me know after you had a chance to look at it, maybe text me or whatever. Now, once they've seen it, that's one family's conversation on the commercial going around the kitchen table or the coffee table talking about disability insurance. And you could say to your prospect, hey, we've never really had a chance to discuss this. Is this something we could, you know, we could have a meeting over, whether it's Zoom or in face? And what Beth has in her inbox here, we've got 4 of these commercials keyed up for you. College planning, retirement saving, disability. So, you know, I wouldn't suggest sending these out on a large scale. I would individually send them to a client so I could follow up on it. So I think that's one of the marketing ideas I'm coming to you with today on that one. Now I want to go back to a quick. I'm going to try and make this quick, but with questions. Beth, I want to ask. I see there's 36 folks on the call, so I want to prep this up and then maybe stop at this one and see if there's questions. But here's the scenario here, folks. MassMutual offers a single premium or 10-pay option. We're looking at single premium right now. Whole life / LTC hybrid product. This is simplified issue. Simplified issue. We're not going out for APSs or exams. Your clients are going to get approved by this by a simple application, 12 knockout questions. We're going to do a part 2 non-med. Our underwriters are going to do that over the phone. And that's the most important thing. I'm going to come back to that. So we're going to do a part 2 non-med over the phone, which takes about 20 minutes. We're going to do a script check and a motor vehicle check. Now, the target market for life insurance is not necessarily the 50s, right? But the target market seems to be for long-term care conversations, people in their 50s. So our sweet spot here in this product is 50s to 60s. Our max issue age is 69. And there's many products out there in the marketplace. I think we kind of got a grab hold on this one. I'm gonna explain this, and I want to go back to the part 2 non-med for a second. This demographic of who's buying this product is on a single premium where our average ticket coming in is, I'm going to say $100,000 to $250,000. And the demographic here is people who are healthy. Your clients, your prospects have to be roughly a standard health class or better in order to get this product. And it's the same with the other carriers out there. Anybody who's this is not guaranteed issue, but this is simplified issue. So based on the part 2 non-medical questions, which if you're in a life insurance business, you know, hey, in the last 10 years, have you had this, you know, what are your medications? What are you on? What's your height and weight? All of that information's on the phone with the client and the underwriter. A script check is going to verify what prescriptions they've been filling. And a motor vehicle check is going to notify us if they've got a DWI or reckless driving. But again, the marketplace for this product is healthy people, standard or better, who don't yet have long-term care insurance. And maybe they're afraid of the long-term care market. They're afraid of the last 15, 20 years of price increases with the standalone markets. We were in there as well, MassMutual. We don't offer it now. But every carrier that was selling the long-term care standalone traditional long-term care product typically has gone back to their clients and raised premiums. So the clients, the industry out there, there's a bad taste in everybody's mouth about it. And this is a great conversation to have. I want to simplify this. We're going to look right now at, it's been up for a minute, a male 55-year-old. These are based on male or female rates, but I like to call this a 1, 2, 3, 4 approach. 1 is your premium. 2 times the premium is your death benefit. 3 times the premium is your cash value, 4 times your premium is your LTC. Now that's based on dividends, but here's where I want to go now. $100,000 single premium, will never ask for another premium. They can't put it in. $100,000 single premium is going to buy a 55-year-old male, day one, $153,000 death benefit. In 30 years with dividends, that's going to turn into $315,000 of death benefit. That right there is a distinguishing characteristic of us amongst other UL chassis products. Many other UL products might offer a death benefit, maybe $180,000 on day one, but it's a level death benefit staying at $180 all years out. So if the client doesn't use it for long-term care, which statistically 30% of the clients getting this thing may not go to long-term care, but they are going to go, to the death benefit. So maybe 30% of the population out there are going to be accessing this for the death benefit. So I'd rather have $315,000 than $180,000 level premium, level death benefit. What we do with the death benefit, going back to day one, is we double the death benefit. So there's the two. So one is the premium. Two, okay, we double the premium, we double the death benefit for long-term care, the what we call the pool of benefits. So 153 times 2 is 304. And then we divide the 304, everybody gets a 4-year benefit period. So we divide it by 48, as in 48 months, to get the monthly benefit of $63.54. This product, the only, I don't want to say the only, but the negative of this product in comparison to another carrier out there is that we're not raising the monthly benefit for long-term care. There's no inflation option on this, okay? But that doesn't mean you don't split the risk maybe and put half in one and half in another carrier's product. But take a look at here. $83,000 is the surrender value in year one because of the commissions paid out. In year 30, the surrender value based on what I first showed you today was a 6% dividend interest rate. Cash value is $272. Most other UL chassis products out there have a return of premium only. Return of premium says, hey, I'm 85. If another pandemic hits in 30 years and I need access to cash value, what do I get? Return of premium, not us, gives you $100,000 back. Here, we're going to give you $272,000 back at a 6% dividend rate. That represents an internal rate of return for you annuity producers out there of 3.29 over 30 years. That's not too bad. Access to cash. Do they have access to cash? Absolutely. This is regular life insurance all the way out. So if they want to go in and take money out, a single premium is a modified endowment, which means unless it was coming in from a 1035 exchange, then it would not be a modified endowment. But if clients are accessing cash, there's MEC rules to be considered there. The LTC benefit pool, okay, it has grown from 304 to 459 in 30 years. Now, here's where I said 1, 2, 3, 4. 1 is the premium, 100,000 the premium. 2 is the cash value in 30 years. 3 is the death benefit. 4, 4.5 is the long-term care benefit pool. So a client who's put in $100,000 has access to $459,000 of long-term care benefit by the time he or she is 85 years old. This again is a male rate. We do have female rates. So in talking to a client, laying this out to a client, your ideal client would be somebody in their 50s who is healthy, does not yet have long-term care coverage, and they're afraid of the LTC products that are out there in the standalone market, but they want some value. Maybe they have this $100,000 sitting in a money market mutual fund, and this is their conservative rainy day money. They have access to this all years out. It takes 6 years in between 1 and 10. It takes about 6 years with dividends for their cash value to equal their premiums paid. And we're not selling this like a retirement supplement concept. We're not selling this like a infinite banking where you put money in and you take it out. That's not what MassMutual does. But it's nice to know that I've got almost 3 times my value at the end of 30 years. Now, I'm just going to show you at 65. At 65, same scenario. Instead of $150,000 death benefit at 65 years old today, I'm getting $116,000 of a death benefit today. But my $100,000 that I gave MassMutual is turning into $230,000 of long-term care benefits at day one. At age 85, so 20 years down the road, it's going to move something here. 20 years down the road, my death benefit's $190, so it's almost double what I gave you in premium. And my long-term care benefit is triple what I gave you. So as you get older, the benefits, and by the way, the 48 compared to 63. And again, that's generated from the 304 LTC pool, which we divide by 48. Beth, this is actually, this is available as well. This is a very simple one pager that I like to have in my in my briefcase or on a PDF, so that I can simply say to a client and explain without going into a 30-page illustration, hey, what would you say to the concept of you giving me money? I'll give you access to that money if you need it for emergency purposes, okay? I'll give you access to that money. It's growing on a tax-deferred basis. You might be making 3% internal rate of return on that money, and then we're going to double and triple it for tax-free benefits for long-term care if and when you need them, and or life insurance, a death benefit. So again, we're not leading the industry in sales in this product because a lot of producers will look at it and say, well, listen, the other carrier, I'm selling this for long-term care. Other carriers will give a bigger monthly benefit than MassMutual. That's when I say to you, leave the decision making to the client, put both in front of the client. And again, your client has to be healthy to get this product. They got to be healthy to get the other products. And for the 30%, again, that's a statistic, and we don't sell LTC coverage with statistics. We shouldn't anyway. But for the 30% that don't use the product for death for long-term care services because they died of a condition, whether it be a heart attack or an illness that they didn't need long-term care, their death benefit may be higher than the other carrier. So why not give the other carrier 50? Give MassMutual 50. Give the other carrier 100. Give us 100. But I think the values in here really are. It's a great product to talk about. It's a great product for the client to view. And again, if the pandemic comes up again in the future, having access to a greater amount of cash value than a universal life return of premium only policy would do, I think is a big benefit. I'm going to stop there on the hybrid. Again, healthy people, standard issue or better. Your application is in and out in about 7 to 10 days. No exams, no APSs. We just do it orally on the phone with the medical questions, and we give you, the producer, a knockout list. The knockout, 99% of people walking around America today would pass the knockout. It's not the knockout that's going to get them out of this. It's the non-med questions. So going to stop there for a minute. I'm going to move over, Beth, to the last 5 or 10 minutes of retirement sup, and then the birthday video idea. So we're all hearing, we're all seeing, we're all selling life insurance as a retirement.
Hey, Joe.
Yes.
Can I interrupt real quick? Just some clarification. There was a question. If there is some cash value buildup and they take it out, it's taxable. I know you already mentioned it's a MEC, but if you want to just absolutely highlight.
So if the client wrote a check to get into the contract, they write their own, checkbook. It is a modified endowment, and what that means is that any gain in the contract is taxable. So if they're, in any year, they're taking money out, if there's a gain in the contract, the gain comes out first, is taxable, and subject to a 10% penalty if they're under the age of 59 and a half. And even if they could take a loan as well, and this is the same with any regular life insurance as well. If your contract is a modified endowment, then pulling money out, even in the form of a loan, that loan coming out first is considered gain. But I think the way to look at this is people shouldn't be going into this with the idea of putting money in and taking money back out. So the MEC status shouldn't affect their decision to control their planning with long-term care coverage. But it's an emergency fund. If they do take it out, we can't avoid the MEC rules here. Does that satisfy you?
And one more thing that I'll let just to bring up is, I know the answer to this, but I get the question, okay, if it's a MEC, then how does that affect the death benefit proceeds if they're paid out? And B, how does it affect the proceeds if they're paid out for long-term care because it's a MEC?
Yeah, great questions, both of them. So when we pull money out of the contract, we're actually, if we're taking dividends out, okay, if we're taking dividends out, that dividend was a PUA, paid up additional amount of insurance, that increased the death benefit and also increased the long-term care. So if money's taken out, it does decrease the death benefit and as well as the monthly long-term care benefit. What happens in this specific contract here is the death benefit, if you remember, the death benefit times 2 is the long-term care pool. So number one, when somebody goes on claim, we first exhaust the death benefit, then we exhaust the long-term care pool, which was double that amount, and then third, we go into the long-term care benefits that are derived off of the dividends that are building inside the policy. But pulling money out, and let's say we don't put it back in, creates a loan against the death benefit, and that loan is going to be taken dollar for dollar off the long-term care benefits as well if there's a loan on the policy. Okay?
Oh, what I was meaning is that if you do go on claim, I get the question of, is the long-term care amount that you're getting, since it's a MEC, are those benefits taxable? Or when the death benefit pays out, is it taxable because it's a MEC?
Great distinction of the question, and the answer to that is simply no. A modified endowment only affects clients who are pulling money out of the contract while they're alive. If it's a modified endowment, there's going to be taxes paid on gain on the amount they're taking out. But when they go on claim for long-term care, when that benefit's paid out, it is tax-free to the client's caregiver beneficiary. Death benefit tax-free as well. This is a regular life insurance policy, and in the long-term care, adding on to life insurance world today, whether it's this kind of product or a whole life product that has a long-term care rider on it, no, those benefits are considered to be tax-free. Good?
Yeah, exactly what I wanted. Thanks.
Okay. I'll quickly move to this one and only spend a couple minutes here, but I want to show everybody's out there selling life insurance. I see it on TikTok every day. They're selling life insurance as an income vehicle, and that's great. It's creating a lot of awareness out there in the public eye. So MassMutual, what in my mind, I'm going to show you here first. I'm going to show you this is a Legacy 65. We got a male 40 years old that we're going to commit $10,000 of annual premium. So we're going to pay $10,000 a year every year from now until they're 65. The death benefit in the first year is $396. So I would actually say, hey, whole life, what is this going to give to your client? It's going to give a paid up policy when they're 65 years old. At 65, now we got a pot of money sitting in the cash value that we're going to pull money out of on a tax-free basis, and I'll show you that right here. So what this page here represents, and there's a lot of glossy pages that are better presentation materials, but if I pay 10 grand a year up until from 40 to 65, I pay 250,000 into the contract. I asked the computer here, let me see a maximum level income, not paying it back. How much could I pull out of that whole life policy at 6% dividend interest rate for 20 years? So here you're seeing the ability to pull out $35,000 a year. So 35 times 10 is 350, times 20 is 700,000. I paid in 250,000 in premium, and my cash value at 70 here is 506. We're going to start going into that cash for retirement distributions. I just said I like to wait beyond 65, but my point is this: income. How much money can I pull out of a whole life policy if it's been sitting long enough time? And in this case, we got 3.5 times what you paid into it. So we're pulling out $700,000 of income over a 20-year period, and we've still got represents the death benefit, the net death benefit. After we stop giving the client at 90 the income, and we can pay it for wherever, but I just illustrated a 20-year income stream. So we paid the client 700 grand in tax-free income. We still have 179,000, and it's shrinking because the loan interest is not being paid. The loan is diluting the death benefit, but 700,000 the death benefit, and another 180, 170, 160 on death. Okay, that's 900,000 going to the client tax-free. How much did they give us? They gave us 250. Show you the pretty illustration here for your client. Okay, right here, we sum it all up here on this page right here. Here's the accumulated premium from 40 to 65. Here's the income of 35,000, and here's the death benefits at certain ages. So this, instead of taking your illustration out for your client, this is a great way to show your client in a graphic vision what this concept looks like. Now, Beth, I want to explain two things. Remember I said moving parts. What kind of moving parts? What affects this income? here, and there's only two. The dividend rate, so this assumes we've paid 6% now and every year until the client's 90, 100 years old. The other thing is we use this income going out to the client, we use loans, and the loan interest rate is adjustable here. So this is not guaranteed, but what we're doing is we're saying, hey, based on an adjustable loan rate of 5.03%, which is what we're charging today, this is the benefits that we're going to see in these years. So if the dividend rate stayed at 6%, and if the loan rate stayed at 5.03%, it's not, folks. It's going to change. Both of those things are going to change, but those are the only two moving parts. Now, remember this word, remember this number, $35,000. I'm going to show you let's take away one of the moving parts. Let's take away the adjustable loan rate. Let's give your client a fixed loan rate. And how does that affect this $35,000 here? The fixed loan rate is more, it's 6% guaranteed for the life of the contract. Now, here comes that illustration. I'm expecting the income to go down from 35,000, and here it is right here. 34,652. Folks, it's not worth a haggle of a conversation. Now, this is a $10,000 premium. If I've got a $100,000 premium or a 50 or a $1 million premium, we get them, we're writing them, okay, but you know, you determine how much information you want to sit there with the client. But here's my point. If I want to take one of the moving parts away from a volatile discussion of retirement income and the client saying, well, what can happen? Are these guaranteed? No, these are based on the dividend rate of 6%, never been below 6 in the last 42 years. Okay, and this is based on either adjustable loan rate or fixed loan rate. I could take the adjustable out of the equation and give you the fixed loan rate. And that fixed loan rate means a 6% loan interest rate for the life of the contract, guaranteed, never to change. The difference between 34,600 and 35,000, I don't know which I would choose. I do know, but you know, what are the odds that the adjustable rates are going down over the next 20, 30, 40 years, or going up? So I just think it's a neat thing to be showing retirement distributions coming out tax-free out of a whole life policy with only one moving part or two. Okay? Beth, I'm going to stop there and I'm going to go into my birthday video mode. How are we doing on time? It only takes me 2 minutes.
Go for it.
Okay. Okay, folks. So I started doing this. I'm going to share my screen and I'm going to go to LinkedIn. If you're on LinkedIn or if you're not, how many of you out there are making birthday videos for your clients on their birthday? And I'm going to gather and say not too many of you are. I've been doing this idea for 1 year now. I make 20 videos a day, and I do it through LinkedIn. LinkedIn tells you in the notification, in the networks right here, in your network right here, you see celebrations here. This tells you, let me just have my system. So LinkedIn tells you three things. When your connections are having birthdays, work anniversaries, and job changes. So right here, it tells me here, so who's having birthdays today for me? And it's these folks. So what I do is I jump online, I make them a 20-second video, and I say, hey, Hector, happy birthday. I'll show you actually an example of the video that I made. I didn't do any this Easter weekend. I was swamped with family activities, but I do them on the weekends. And folks, while I'm getting one to pull up for you here, I'm going to tell you, I do 20 videos a day, and not one person, everybody loves them. Not one person, I ask everybody when I do a birthday video, hey, respond back to me. Let me know if anybody else has gotten this, has given you a birthday video, and nobody has. So here's an example of one that I sent a few days ago. Now I'm sending this, folks, my LinkedIn connections are producers like yourself. So I'm teaching you in a video how to do this. You doing this to your client, you're just going to say for 30 seconds, bear with me 1 second. You're just going to say, happy birthday and leave off the line. Don't ask for business. Give me 1 second. The wrong video popped up. I'll get there. I feel like I'm sweating trying to show you this, but this is one of the biggest game changers in prospecting and marketing in my activity in the past year. I spend an hour a day creating these videos, And the reason they're important is I'm not asking them for many of you, I may have already, if we're friends, I may have done this if your birthday came up, but I'm not asking you for business. I'm just wishing you happy birthday. And the reason you don't ask for business, let's see here. The reason you don't ask for business is you don't want to be poaching. Just want to, gee whiz, what's going on? Hold on. Hold on. My internet in my office here is sending me somewhere else. Apologize for this, Beth. This is not like me.
Hey, Jeremy, Joe Mulligan, MassMutual Brokerage, Company here on LinkedIn. Don't hang out. Hey, tomorrow's a big day. Tomorrow's your birthday. And I just wanted to jump online ahead of everybody else. Hopefully I'm the first in the door. Wish you a happy birthday in a video format like this. I'm doing this on my cell phone through the LinkedIn app, by the way. But a video format, happy birthday. I got a special gift for you, Jeremy, and I want you to take a look at it tomorrow or even the next day, the day after your birthday. Check out your LinkedIn messaging inbox and see how many of your 7,100 connections and followers have gone to a video format to wish you a happy birthday. Sure, they're going to text, email, the preloaded LinkedIn message, but how many have gone to a video format? I'm going to make a guess and say I'm the only one. And I'm going to do that because I do 20 videos a day. I've been doing it for a year. And I ask everybody to react to me. Tell me if you're getting any. And nobody in a year has told me they've gotten a video. So, can't believe I'm the only one doing this. But anyway, I'm sharing with you a great idea for engagement with your connections. You want to create and build better relationships? Just wish your folks, your 71 connections and followers, a happy birthday on their birthday. We don't ask for business. We don't ask for referrals. Job changers and work anniversaries we're also notified of. Those you can, have hay with. Job changers, if there's a 401k rollover, you're the guy. But anyway, birthday videos, 20 seconds. That's all.
Okay. Were you able to see and hear that, Beth?
It was a little bit muffled, but I could hear it okay.
Okay, so yeah, you know what, for future, that if this were Zoom gives you an option right out there to share your sound with them so that people hearing it. But here's the, folks, I'm going to tell you, here's the win. I created a list, copy and paste everybody who reacts positively to me on that birthday video idea. And that's my rainy day list. That's who I go to on the next wave. Next time I reach out to that person, they remember me for that birthday video. They remember that number one, they remember that I didn't ask for business. And that's a tough thing in our world not to do that up front. But you're doing a good thing on a good day. And nobody, the key to this whole thing, I found, nobody else is doing this. Not one person has said to me, Joe, I got another birthday video from XYZ. Now, I'm sharing a lot. I do 20 videos a day. That's about, that's 5,000 videos a year. So it's going to start happening. But I would tell you, if you want to create better engagement with your connections, and it doesn't have to be on LinkedIn, you could just make a video on your phone, send it to, you got to know who your birthday people are, when their birthday, send it through to their, text it to them. But the way to do it, I'll give you the way to do it. The way to do it is, you can't do it on your computer. You actually have to go through the LinkedIn app. And the LinkedIn app then opens up, and you just go to the same thing. You go to your connections, and then you go to the celebrations to find the birthdays. Again, I talked about on that one video, job changers. Be the first in line to do a video job changer and say, hey, I want to reach out to you. Congratulations on the new job, and see if did you roll over that 401k yet? Did you lose any benefits or anything I can help you with? So with that, Beth, I'm going to thank you for giving me the opportunity to long-winded talk. I'm going to close it down. I'm available. Folks, if you see me on LinkedIn, Joe Mulligan, reach out to me. I'd be happy to share, that. And I think I'm an idea person outside of being in the product space. But, you combine two things, combine great products and ideas, and that's what will get you in the door.
Hey, Joe, I always appreciate you. I'm going to go through a couple of, I want to say a couple of things. One is I think the birthday idea for LinkedIn is out of the box. A lot of people send out birthday cards and anniversary cards, but taking advantage of the free information that's on LinkedIn, even job changes, just to notify, like, that's a good opportunity for 401k rollovers and things like that of people that you might know in your LinkedIn. And again, you know, it's not aggressive like going out there and asking for business. And then secondly, the disability video, that one's a really great one. You guys might have noticed it on the NCAA tournament. I noticed it before Joe and I even talked about it, and I thought it was a very clever commercial, but that is a great thing to send out to clients, very short and sweet, and it's a good thing to get into topics. And disability income topics lead into life insurance topics every single time. So I'm going to go ahead and with the polling questions here, if I can. The first one is, if you would like to get contracted with MassMutual. Okay, I'm going to close that one out, and then we're going to go with, would you like some more information on the upcoming life and annuity academies? And I'll close that one out. And the last one is, do you have any clients in mind who could benefit from single premium life? All right. Well, again, thank you for taking the time to spend your Monday with us. Again, Joe, thank you for always helping me out with these webinars. I certainly do appreciate it. There was a lot of great content in here, and I hope you all have a great week.
It's a pleasure, Beth. Thank you for the opportunity as well, and everybody as well. Have a great week, as Beth said.